1. Hello, my name is Dan Blondell. I'm the CEO and founder of Nano.1 Materials based in Vancouver, Canada. Nano.1 is a technology company developing process technology for the production of lithium-ion battery cathode materials. The cathode material is the powder that's used on one of the electrodes in the cathode. It's a critical material composed of components like lithium, nickel, manganese, cobalt, and a series of other valuable metals. As a technology company, we are developing a process for assembling those key materials into a composite cathode material using our one-pot technology and single crystal powders that are made from it. And we have a technology we call M2CAM, which allows those powders to be assembled in a cleaner, greener, and less expensive way. We have currently 19 patents issued around the world. That includes China, Japan, Korea, Taiwan, Canada, the US, and we will soon have patents in Europe as well. And we are targeting at roughly a $23 billion cathode market in 2025, so mid-decade. As a technology company, we are focused on a licensing strategy. So that means we're looking to license our patents, our know-how, our engineering plans, our people into the space through partnership with cathode producers and other chemical companies. We work up and down the supply chain, as you'll see from the presentation, anywhere from the miners to the midstream chemical producers to the OEMs who are putting the batteries in their vehicles. And the objective is to license our technology into the space through joint venture or through a pure license deal. We are a TSX listed company. We uplisted from the TSXV back in June, just a month and a half ago, and we are listed under the ticker NANO, Nano. Of course, as a public company, I'm prone to forward-looking statements, and I caution you to do your own research. So maybe a very quick walk through the leadership and who's who. So that's me on the left-hand side, Dan Blondell. I am the CEO and founder. I have a long history in industrial technology, working for Kodak, working for a company called Creo. I even had a stint in nuclear fusion for a little while, and I've been at it with Nano.1 since 2011. John Lando, my partner, business partner, and co-founder in Nano.1, comes out of the capital markets, having a long history in equity market finance on the junior side of things, and was formerly a trader at RBC Dominion. Stephen Campbell is at the core of the technology as CTO. He came to us from previous positions as principal scientists at both Ballard Power Systems and Automotive Fuel Cell Corporation. So a rich history, not only in electrochemistry and clean energy systems, but also a tremendous amount of experience in the automotive sector. Alex Holmes joined us in January this year as the COO of Nano.1, and comes to us with 20 years of experience, 10 of it on the investment banking side, and 10 of it on the company and technology side, both in software tech and more recently on the resource extraction and from a lithium play in Bolivia. So a tremendous amount of experience and know-how in the space. And Paul Matisik, some of you may have heard of, is a chairman of the company. He's a serial entrepreneur and has sort of generated enterprise value somewhere between $2 and $3 billion. A lot of it in the energy metal space, lithium, copper, etc. And brings a tremendous following and a lot of very loyal shareholders to the play. Joe Lowry and Robert Morris are both advisors to Nano.1. Joe on the lithium side and Robert on the nickel and cobalt side of things. We are, apologies for the slides. We are in a fairly heavy growth phase. This slide is actually a little bit outdated. We're closer to 50 employees right now, a lot of engineers, PhDs, et cetera. And we already talked about the patents, but as you'll see in a little bit, we also work very collaboratively up and down the supply chain. And we have about 20, maybe about 24 different collaborators we're working with on various projects to all with the aim of commercializing our technology towards licensing. So let's do a little bit of a battery kind of 101 session here. Cathode materials are the most expensive component in a lithium-ion battery. They're not quite half the cost of a lithium-ion battery, but battery cell, but they comprise certainly close to 40%. That's very dominated by the raw materials. So the cost of lithium, nickel, and cobalt, for instance, largely governs that 42% you see here in the example. Our focus is on the process, so taking those raw materials and combining them in a way to boost the performance, the durability of the battery, its capacity, its charging, its cycling, but also to reduce the raw material costs and the waste and the processing costs as well. It's applicable to standard advanced solid state batteries. So it's a platform technology. We can make a variety of different cathode materials. They all have lithium in them. They can have nickel, different balances of nickel, manganese, cobalt. They can be lithium iron phosphate. Each one of those different lithium-ion battery chemistries serves different purposes in the market. Some of them are good at charging, some of them are cheaper, some of them are safer. None of them are ever all of the above. So the industry will always see a blend, a mix of different lithium-ion battery materials working in different applications. And our technology as a manufacturing technology can make all of the above. So we're fairly well hedged against which way the market goes. And cathode materials are required in conventional lithium-ion batteries all the way through to solid-state batteries. So again, it's all what we're doing is pretty much relevant to 100% of the lithium-ion battery space here now and into the future. We have generated a number of very exciting partnerships over the last few years, and we're going to walk through those in a little bit of detail right now. So maybe we'll start in the middle on the gray column, the cathode producers. Most recently, we announced a joint development agreement with Johnson Matthey, a many hundreds of years old company, most recently in the auto catalyst space, doing making and supplying auto catalysts like platinum. Johnson Matthey has made a move into cathode materials over the last kind of half dozen years and has a tremendous amount of experience on the battery side of things, having worked very closely with platinum also in the fuel cell space. So what we're doing with Johnson Matthey is we're taking our one-pot technology. This is our ability to the way we make cathode materials, and we're making a next generation ELNO cathode material. ELNO is their branded cathode material, and we're working with them to develop a new version of it that will be cheaper, better, stronger, faster kind of thing. So really trying to drive down costs and improve the performance of the material for a next gen. We're doing a similar type of program with an undisclosed partner in Asia. This is an Asian partner outside of China, I might say, on a product called LNMO. So that's lithium, nickel, manganese, and oxygen. That's what that stands for. Also known as high voltage spinel, HVS. This is a next gen material really focused on fast charging and high power applications. And this particular joint development agreement is getting, we believe, is much closer to to sort of commercial terms than any of our current kind of relationships. So we're very excited to have this one moving forward at a strong pace. We've crossed through a number of different thresholds over the last year with this group, and we're in discussions right now trying to map out really the benefits and what the technology transfer would look like for them to use our technology in the manufacture of these materials. And then lastly, we continue to work on lithium iron phosphate. Interestingly enough, there's been a little surge in interest in LFP this week. Primarily because Tesla made a statement at the earnings call that LFP will be a dominant material and a dominant chemistry in their batteries. into the future. So they anticipate that LFP will play a very important role. LFP is the cheapest, lowest cost, and safest of all the lithium-ion battery chemistries. However, it's not as energy dense as the high nickel materials like ELNO up with Johnson Matthey, so it's typically being applicable to markets where safety and cost are absolutely paramount, and that typically is the industrial heavy duty type applications. But we're seeing new battery systems come out that are much higher density than previous. So this is kind of Gen 3 LFP, and that's led to a wider scale adoption of these types of materials in entry level and midstream electric vehicles. So we think LFP will play a strong role in the mass market as well. So we continue to be very focused on that cathode material as well. So those are kind of three of our kind of really important initiatives, and we have various partners and producers we're working with. But we also work up and down the supply chain. So the electric vehicle sort of OEMs, we have a stated partnership with Volkswagen. We have an undisclosed partnership, an undisclosed name that we're partnered with US OEM, and we're working virtually with every other OEM kind of around the world right now to develop next gen materials and lower cost, lower footprint technology in the for the next generation electric vehicles. And then we also work upstream with miners, refiners. We announced a deal with CBMM, the world's largest producer of niobium. Niobium is a key component in providing protective layers on the cathode materials to make them last longer and perform better. And so we have a development program underway to incorporate CBMM's product into our cathode materials. And then Saint-Gobain is kind of more on the equipment side, and we're working with them to develop improved thermal processing, and that'll all become kind of evident as we walk you through the process itself. But kind of before we get there, I'm going to run you through this little 1 or 2 minute video that explains what we call our coated nanocrystal technology, or single crystal technology. So I trust this will come through loud and clear. If it doesn't, Jim, just raise your hand so I know.
Governments, multinationals, and ESG financiers are fueling the transition to a low-carbon economy. At the core of this transition are renewable energy, electric vehicles, and batteries. The push is on for extended range, faster charging, and even million-mile batteries. These batteries work by shuttling lithium ions between cathode and anode materials during charge and discharge. But performance is limited by the durability of these materials. Lithium cycles in and out of the cathode through large clusters of crystals, but cathodes are prone to side reactions in the battery, impacting safety, durability, and longevity. Coatings can be applied to the surface of the clustered crystals as protection against unwanted reactions, adding complexity and cost to the manufacturing process. And repeated charging damages the coating as clusters of crystals expand, contract, and break apart, leaving the nano-sized crystals within the cluster exposed to side reactions. Single crystal cathodes are less prone to cracking and can be formed with extra heating prior to coating, but this adds even more cost and complexity. Nano One's innovation solves all of these problems by forming single nano-sized crystals and a coating simultaneously. It begins with Nano One's patented one-pot process, where lithium is mixed in a single reaction with coatings and other metal feedstocks to produce a composite precursor powder. When heated, it transforms into coated single nanocrystals, with no extra steps, no excess heat, and no added costs. Nano One's coated nanocrystal technology adds durability for long-range, fast-charging automotive NMC batteries, enables high-voltage, ultra-fast charging of cobalt-free L&M solid-state batteries, brings power and cost advantages for heavy-duty LFP applications. With piloting, patents, and a growing list of global partners, Nano One is changing how the world makes battery materials.
So I hope you enjoyed that video. It's available on our website, and certainly it's a very quick summary of our single crystal cathode technology. I'm going to walk you through a little bit how cathode materials are made today, and how Nano.one's process that we just kind of walked you through can improve the cost and environmental footprint. So the first thing we have to do is look at the existing supply chain and how it works. So it's long and complex. I'm going to walk you through it. The first thing that happens is that, of course, in the supply chain is that materials are mined, like lithium, nickel, manganese, cobalt, and they're turned into useful chemicals that can be sold into different industries. To make it into the cathode space or into the battery space, they have to go down a very specific path in today's system. So the metals, the nickel, the manganese, and cobalt, ultimately have to be converted into a sulfate form. And that adds energy, water, cost. And if you have to ship the powders, the sulfate powders, they're about 5 times the weight of, let's say, of a pure nickel metal. So that adds a CO2 footprint, of course, logistics and shipping costs. When all those metals arrive at the first point of cathode production, they're added together to form what we call a precursor, or a PCAM powder. But in doing so, all of the sulfate that was made in the step before goes into a waste stream. You don't want the sulfate in the cathode powder, so it's really just an intermediate chemical. And so that sulfate all goes into a waste stream. It either has to be recycled at great cost or landfilled. And just to give you a sense of that, the sulfate waste is about 1 to 2 times the size of the product stream itself. So it's not an insignificant waste stream, and will become a bigger and bigger problem, and certainly already is becoming a big problem wherever the volumes of materials are starting to increase. So from that chemical process comes the PCAM powder. So this PCAM means precursor active, a precursor cathode active material. And really what it is, there's no lithium in it yet. It's just nickel, manganese, and cobalt mixed together to form a hydroxide in the form of a hydroxide chemical. And it's a black powder essentially. And what you have to do is add lithium into that mix. And that happens, first of all, you have to kind of go back upstream where lithium is mined. It's made into a useful chemical like lithium carbonate. It has to be converted into lithium hydroxide. And that adds energy, cost, and handling, of course, before it can be mixed, ground, and milled with that PCAM powder to make a kind of call it a sort of a black and white salt and pepper like powder mixture. And once you have that kind of powder mixture, it goes into ceramic trays, and it's conveyed through these very large, long furnaces. They're like big, long pizza ovens, and they're pushed through these furnaces up to 800 degrees Celsius, 900 degrees Celsius. At that point, the lithium kind of melts into the PCAM powders, and lithium starts to work its way between all the nickel, manganese, and cobalt atoms to form the crystal structures that will then allow it to be charged and discharged in a battery. And that firing in the kiln can take days, and quite often it has to be taken out of the kiln because of some of the melting doesn't happen evenly, and everything forms bricks. Those bricks have to be ground and milled and put back through the furnace until you get a free-flowing powder. That powder is then, particularly if it's high in nickel, has to be coated with a specialized coating, either through a chemical and firing process, or what we call a cold firing process like atomic layer deposition. Both of them add cost and to the process, and extra steps, and of course have an effect on yield, etc. All of this to form the coated cathode materials that we watched in the video. These are again, they're what we would call a polycrystalline powder. So each little grain of powder consists of a whole bunch of crystals, and the coating goes around that whole bunch of crystals, and it's susceptible to cracking and falling apart as you charge and discharge it in the battery. So a lot of steps. It is long and complex, and what we do differently at Nano.one is we we actually completely eliminate the need for sulfate. And so we bypass the sulfate intermediate step, and so that cuts down the it of course completely eliminates sulfate. It cuts down the amount of water, cuts down the carbon footprint because you don't have to ship as much material around. You're not using all that energy to make the sulfate or ship it. And that, of course, has an impact on cost and logistics as well. It eliminates complexity, waste, cost, and carbon footprint throughout the process. We call this our metal to direct cathode material, or M2CAM. So when we refer to M2CAM, it refers to the what we're doing up front here to get rid of the sulfate. So our metals go directly into the single pot, one pot process. And at this point, we're also adding in lithium. But we can, because we're adding it into a sort of a chemical reaction rather than a solid powder mixture, we can put lithium carbonate directly into the reactor. So we're using the chemicals in that reactor to convert the nickel, the cobalt, the manganese, and the lithium carbonate into a usable material that fires readily in the furnace. We also add the coating material in directly at the same time. So everything goes into this one pot at once. It's simpler. Of course, there's no sulfate waste anymore. And the precursor already has the lithium and the coating material in it. So there's fewer steps and, of course, reduced cost. That chemical process in the one pot process produces a mixed compound, a composite material that fires readily in the kiln. So it doesn't take as long because everything's actually already chemically mixed together. So we're firing in that kiln for hours instead of days for reduced cost. And ultimately that produces the single crystal coated materials that we looked at in the video for increased durability. All of this adds up to a much simpler process. With all the materials going into the one pot process to make our more sort of durable coated single crystal material. The benefits we've talked about already are in these kind of gray boxes that you see down below. And ultimately it's a fraction of the carbon footprint and a potential saving that's measured in many thousands of dollars per ton. And we'll go through the economics a little bit in the following slides. But before we do that, I just want to run you through the different chemistries that we work on. So we've talked about NMC 811. NMC materials are high nickel materials. They can have they can be 1/3 nickel. They could be 80% nickel, 90% nickel. The industry's pushing to higher and higher amounts of nickel. The problem with that is that the materials become less and less stable as you weed out the cobalt. And you have to compensate for that with other materials. And so we've developed a niobium coating that goes around the outside of the cathode materials. That's that yellow the yellow image you see around the blue. And that provides a protective coating that allows lithium to go in and out really, really easily. But it prevents the nickel and manganese from reacting with the electrolytes and other chemicals inside the battery. And that leads to a longer lasting material. So you can see here, the green line is much flatter, the blue line is much steeper. And we're measuring here we're measuring the capacity of the battery over a number of different charge cycles. So it just shows that there's a remarkable improvement in the longevity of the material when you add that coating. I should mention that this plays a very large role in all of the NMC work we're doing, including the eLNO work with Johnson Matthey. So this single crystal coated technology is a very important part of the performance improvements we're trying to bring to that material. We also have a considerable amount of effort being put into the LNMO material. There's no cobalt in this material. It's dominantly manganese, so it's a manganese-rich material. There's some nickel in it, and there's no extra lithium in this material. So it tends to be a really low cost material. It doesn't have the cost of cobalt, doesn't have the extra cost of all the extra nickel. And you can see the crystal structures in the micrograph here are very different than the last one, a very angular sort of octahedral looking structures. But again, we're able to apply this very thin nanometer layer skin on the outside of the particle. Now, I should say we kind of do this from an inside out. And this is what makes our coating technology very different. Before everything goes into the furnace, our coating material is already mixed uniformly with all the other chemicals. It's only when you heat it up in the furnace and everything starts to form the right crystals that the coating material is actually pushed to the outside of every little crystal to form that little yellow skin that you see on the outside, and it makes for a very uniform and effective protective coating. One of the things that's allowed us to do is take this high voltage material and run it in a high voltage battery. Typically, high voltage batteries fail within a couple cycles. They either develop a whole bunch of gas or and puff out, or the manganese dissolves and fouls up the graphite anode, and they only last a couple cycles or a dozen cycles. We found a way to make this material. We found a way to protect this material and work with the right combination of electrolytes to make this last out to 1,000 cycles. This is a very remarkable achievement, and certainly draws a lot of attention in the industry, and it's resulted in us having many different test programs underway to evaluate this material. Be very effective in power tools, high power applications, and ultimately the electric vehicle space as well. And then lastly, we've talked a little bit about lithium iron phosphate being the kind of the longest lasting, safest, and lowest cost of all the cathode materials, simply because it's iron and phosphorus are dirt cheap, literally, and really the main cost of this material is the cost of lithium. We have a number of different test programs and sort of partnerships underway in the LFP space, and we believe it's going to be, as I said before, it's going to be a very important chemistry in the lithium-ion battery space, particularly for the entry-level and midstream mass-market electric vehicle space. And that was largely confirmed by Elon Musk earlier this week at his during their earnings call when asked about LFP. So we're certainly very excited about it. This is how we see the cathode market. You see these gray bars and green bars. They largely bracket where we think the cathode market is going to go. It'll fall somewhere between $25 and $45 billion by the kind of end of the decade. And just to give that context, that's the equivalent of about 25 to 45 million electric vehicles on an annual sort of basis. And so we're anticipating to play a role in that market in all three of the different chemistries: LFP, NMC, high voltage spinel, and possibly others as they start to evolve. Our licensing scenario is often of quite a bit of interest, so I'm going to walk you through this very quickly. Licensing could kind of happen in two different ways. It could either be a pure royalty, where we're simply just licensing our technology, servicing the customer, maybe the chemical producer, helping support them in the use of it. And it could also be in the form of a joint venture, where we are sharing in the obviously in the revenues from making the cathode materials, and not just from a royalty. So when we break these two down, let's look first of all on the left-hand side at the green one. A single production line we've modeled here is about 5 million kilograms per year of cathode material. So that's about 5,000 tons a year of cathode material, and that's equivalent of about 70,000 electric vehicles that have a 45 kilowatt hour battery in them. If we assume that we're bringing about $4 of saving to the material, that's by getting rid of the sulfate and getting rid of lithium hydroxide and the improvements in the process itself. A $4 saving could earn Nano on roughly about a $1 per kilogram in royalties. So when we do the math, 5 million kilos a year times $1 is $5 million a year in royalty revenue per production line that we put out. This strategy is low in OpEx. Of course, we're not bearing the cost of building these things. It's high in margin because our operating costs stay relatively low, but it's a modest cash flow per line. The number of production lines, just so you get a sense of it, is shown there in the gray sentence at the bottom of the slide. The total addressable cathode market is about 200 to 300 production lines by mid-decade. So just to give you a sense of the total sort of marketability. So that puts the total addressable market into $1 to $1.5 billion a year in following the royalty model. In a joint venture, we would be we would assume a cathode selling price somewhere between $20 and $30 per kilogram, and generating anywhere between 100 to 150, maybe even $200 million a year in shared revenue with the joint venture partner. This is, of course, higher in OpEx, it's lower in margin, but the cash flow per line is higher. Both models that we are pursuing with a number of our different partners, and excited to have further announcement on that in the months and years to come. Very lastly, this is just a kind of a historical slide, tells you kind of what we've done. The company was founded back in 2011, and we raised raised probably $3 million in those initial years. We took the company public in 2015 and have subsequently raised a total of $76 million in equity, $13 million in non-dilutive grants from the Canadian government, and we have cash and runway taking us through to the mid-decade right now. We're sitting on about $60 million in treasury. Our last raise was back in February to the tune of $29 million. We did a bought deal with TD and Roth and 8 Capital and Gravitas, and very excited to have that sort of completed before things got jittery in March. And since then, we've announced the CBMM, the Johnson Matthey deal, and we hope to bring more partnerships and meaningful sightlines on revenues and commercialization in the coming months and year. And I think, Jim, that takes me to the end of my slide. So Nano One is changing how the world makes battery materials, and I thank you very much for your attention.
Oh, great, as always, Dan. I will kick it off. If anyone has anything in the Q&A, I could read them as well, but the section of the Zoom. I guess my question is, I think slide 16 is a new one, or it was new to me anyway. And I'm just wondering how those discussions go with your potential partners, whether it be royalty or JV, and obviously you can't really directly answer this, but with whom are you speaking? Is this more on the upstream or more on the downstream, or?
Well, it's a great question, and of course, you know, the details of any discussions I have are confidential. But I think in general terms, I think the first thing we try to do to establish the what that revenue stream and the value is we're looking at the net benefit. So if we're basically, it always comes down to this, is comparing our process, the cost of operating our process to the cost of a conventional process. So if a conventional process costs $25 a kilo to make cathode material, and ours costs $20 a kilo, there's a net benefit of our technology bringing a $5 value. And I would say that that's very simplistic terms, but that's virtually where all the discussions go. So we're having that discussion with the major sort of multinational OEMs right now, and in doing so, we're not only having to present our models, but we're starting to have to reach out to third parties to confirm all of that as well. So we're working with engineering companies and research firms to back a lot of that up and put those numbers in place. It's complex. Look, it's different in different jurisdictions because supply chain is different in jurisdictions, and the spot prices are different in different places as well. So each case has to be kind of carefully walked through. But at the end of the day, it's making that comparison to the incumbent process and to what we do that establishes the value. That value then establishes in a form of a royalty would establish what we would get in form of a royalty. You can imagine we don't get it all. We'll share in that. The easiest way to look at it is a third comes to Nano, a third of the benefit goes to Nano One, a third of it goes to the partner, and probably a third of it goes to their customer because it'll help them capture more market share by driving down those costs. In a joint venture, that benefit would split probably in the form of the shared production revenue, and it might very well be the same kind of thing. Nano.1 doesn't bring the a deep expertise in production. We're basically process innovators. That's what we do, and our partners are production experts and supply chain experts. And the combination of those two things, we believe, can create a superior and much more competitive product that's greener and cleaner. One of the things, this is all basically how we establish the really the value and revenue part of it, but the clean energy aspect is huge as well. Look, getting rid of that sulfate midstream thing is a big deal. Not only, I think not only for just the obvious sort of waste and environmental reasons, but also, of course, the OEMs, they're all looking for greener, cleaner things. Elon Musk has certainly been pounding his table about cleaner nickel. And look, cleaner nickel, the cleanest way to do nickel is to go from nickel powder directly into cathode and avoid all the sort of ugly steps in between. And so that's, and that's always been kind of part of our process, and really in the last year and a half we're starting to see a huge push towards that. But the miners are also very interested in it, because right now anyone making kind of lithium carbonate has to give up a little bit of their premium to have it converted into lithium hydroxide. And the same goes with nickel. It has to be converted into sulfate, and so you're giving up a premium, right out of the gate when you've got this kind of sellable product. So by being able to make cathode materials really from the first point of liquidity in a miner's world, which is the metal or the lithium carbonate, we create more value for the miners as well. So that's created a lot of interest there, and a lot of interest in partnering with us. And that's why we get engagement way upstream, because our process really disrupts the supply chain and makes it better for the auto producers and the miners, both from a cost and from an environmental point of view. Long answer to your question, Jim. I hope that
great answer.
It. Okay.
We've talked before, giving you the whole spiel that I'm an old auto guy, and that's what I did on the sell side for 11 years.
Yeah.
And I would have never in a million years believed that Volkswagen is going to build its own batteries, some Northvolt, but some of those will be Volkswagen plants, and General Motors as well.
Yeah.
So I'm just wondering, do you see that as a larger opportunity for Nano.1, or suppliers as well, so I know how difficult the OEMs are to deal with, or is it just kind of a pain? Yeah.
Look, I think the world is shifting underneath them, and I would say I think what's happening in the automotive space is that they over the last 100 years they've been fine tuning their business to be less and less vertically integrated. They're just wrapping a badge around a bunch of products they pull off shelves. They pull them off the shelves, they integrate it all, and they wrap their brand around it, because their brand is where all the value is for them. But with in the lithium-ion battery space, there's so much kind of a cost to cut out of it, and there's so much improvement. They have to become more vertically integrated. So one of the best examples I have actually for this is the Chinese company BYD, who make the more electric buses in the world than anyone else. So BYD is the most vertically integrated auto company in the world. They started out as a cell phone battery company and made their way into who they are right now. They mine, they make cathode, they make anode, they make cells, they make packs, they make cars, they make buses, the whole works. And they had to do that because they were really one of the first. They're a Berkshire Hathaway funded group, and have been tremendously successful. But the reason I bring them up is because one of the things they've done, which is really interesting, is they've made this kind of blade battery pack. It's LFP driven. And what's different about it is that they've taken the properties of LFP, which basically is that it's safer, it's more thermally stable, and it's enabled them to pack more cells, pack them tighter and closer in a battery than you can do, let's say, with NMC. And it's driven up the energy density, not at the chemical level, but at the pack level, simply because they can squeeze more of these together. And in doing so, they form beams, like little structural beams, and it enables them to replace some of the structural beams that would go in a car or a bus. And so the battery is getting lighter and more dense. And it's only through vertical integration that you're able to do that. You can only go there if you actually understand the chemistry and the cells and the manufacturing of those cells and how it all fits into the car. And that level of vertical integration is what we are going to see rocket through the whole automotive space, because no one's going to be able to compete unless they're moving like that. And so that's why you're seeing Volkswagen and Ford and GM and Tesla is of course ahead of those guys, because Tesla's been more vertically integrated. They're not as vertically integrated as BYD, but their battery day last year, they certainly intimated they're trying to get there. And I think everyone's trying to get there right now, because they recognize that the only way they can drive down costs and the only way they can improve the energy density and range of their vehicles is to do kind of like BYD's already done. They're already in commercial production in China, and but I think we're going to see that level of vertical integration. Are they ever going to become chemical producers? I doubt it. Probably not, but they are going to be, I think the OEMs want to certainly demonstrate novel technology, and that's where one of the big opportunities is for us. We believe, well, we're working with the OEMs to get to some kind of development phase where we are demonstrating our technology in collaboration with the autocos, and partly that's to create a credible threat. Look, you can't change the supply chain without taking some risk, right? And that risk, investing in manufacturing to prove that it can be done. And once you tip it over that kind of hillside, we believe that it will gain a tremendous amount of momentum, and it will literally change how the world makes cathode materials.
Amazing. And I guess to follow up on that, I know that you have a fairly small demonstration facility in BC. Is this something where, when you talk to the board, you've considered making maybe a larger sort of pilot facility, doing some manufacturing, which obviously is cost without revenues? Shareholders might not like that, but I'm just wondering if longer term strategically, that's how you and the board are thinking would be a next step.
Yeah, I think obviously if we could go straight into a license deal, and we may very well have some stuff going on that front. We recognize we're going to have to take the jump and probably do some demonstration type facilities but we'll do it in partnership. I don't think we don't see ourselves doing it independently, because ultimately at the end of the day, you're going to need the offtake for the cathode material. That's going to have to come from a battery producer who's committed to your material. So there's a little bit of horse and cart thing that has to go on here as well. So it has to be done in partnership. Look, we're trying to change the supply chain. It takes the whole village to get involved in that, and so we're creating the demand up and down at the bookends of the supply chain, and the fulfillment obviously happens right in the middle, where the midstream cathode producers are. But it's not without the support of both the miners and the OEMs that's going to happen. So that's basically where most of our discussions involve that level of sort of collaboration and sort of consortium level views on it. One example we do have is that we formed part of a bid in Chile. The Chilean sort of mining institute, Corfo, is building a clean technology institute in Antofagasta up in northern Chile, just kind of adjacent to the Atacama where all the lithium's made, and down on the coast. And we put a bid in to do a demonstration plant there to prove that lithium carbonate could be used for high nickel materials instead of lithium hydroxide. Now, this goes back to my premise that the miners want to see this kind of change, because if it creates a way for them to put lithium carbonate directly into cathode material, it eliminates that middle step, eliminates them giving away the premium, and it basically makes ultimately the Chilean product more valuable. So it's a perfect example of how really an innovative process like ours can catch the attention of the upstream players, because it's in their interest to see it succeed.
Absolutely. Well, this has been great, Dan, and I apologize for the technical difficulties.
Oh, no worries.
You're more the technical guy than I am, which is an understatement. But thank you so much. I always really enjoy talking to you, and it's been great to see your company really develop. And I will do what little I can to try to keep telling people that Nano One Twitter is probably something you should be paying attention to because they're always working on it. And there will be a lot of press releases. So pay attention.
Great. Well, thank you, Jim. And look, we really appreciate your support and attention and your insight too. I think in the auto space is certainly super valuable here too. So I look forward to continued work with you. Thank you.
Absolutely. Thank you very much, Dan. Good to see you.
You take care. Have a great weekend.
You too.